Welcome to Java. Thank you for joining. It's May 9th, 2025. It is also Friday. So we'll be heading into this weekend with some very interesting things happening in the background. Now, not a lot of reports coming out today, nonetheless, very severely headline driven. So we've got a few things we've got to watch, of course, in these. So we will cover quite a bit of these, including Bitcoin, the lead of the United States administration telling everyone to purchase stocks and equities now and why, as well as the trade negotiations that everyone is looking forward to in Switzerland. So, at least the initiation of these. So, we've got the European Union. We're also going to be speaking a little bit about that. So, as always, let's get started with the markets. Now, we've got deep in the greed territory. So no more fear in this market at this moment, which alone is a little bit of cause for thought here. So at 62, we've got a lot of retailers pouring back into the markets, and we see money leaving out of the safe havens of bonds, as well as the dollar. Gold still strong above 3,300, although it has pulled back a little bit. And we've got a couple of other things. Bitcoin is well above 103,000. Now it spiked to 105,000 and kind of hovering here. So very interesting what's going on there. There was more Michael Saylor purchases. So let's go a little bit more into what's behind this. Daily driver definitely greed. Now we have the chief economist from BNP Paribas saying that there is no recession in the EU, but they only expect what they're calling a soft patch. So their unemployment rates increasing and their inflation they're referring to as a soft patch that they just need to get through. Now with this, we had German stocks last night hit a record high, highest they've been in a couple of years now, on some news that hit overnight, as well as Merz. Talking again, he's on his tour and speaking with other ones. They're talking about more negotiations from the EU with the United States. Now the EU's von der Leyen, Ursula, is saying that she will only go to the White House to negotiate a tariff solution. So this headline is a little bit off. And really what she said, if you expand upon it, is that she wants to make sure that she's got a package put together that can very likely be agreed upon by both sides prior to going to the White House. So actually looking at this from a very practical perspective, understanding that she really doesn't have the upper hand in this, and also understanding that she's walking into a very strong negotiators room, if you will. So on the home turf, we've got the stock market bulls charged up. The S&P 500 target is the test. Now, if you look at the charts, we're not too far from below where there were peaks as far as right after the COVID. So with this, we're looking at currently stocks are slightly up, not as much as one would expect with the news. We've got the futures also kind of looking into increased green, if you will, towards the end of the day. Now we'll look at a couple other factors behind this. The dollar losing a bit of strength, but still holding above the 100.3 mark. So in a short summary, at the moment, a bit stable and looking positive for the stock market. However, this is very much like an inflated balloon, rather an overinflated balloon. Let out a little bit of the air, and that gives it room to inflate a little bit more, and it is inflating rapidly. So a lot of the top economists kind of looking at when it is going to burst. Not a question of if, but when, if this inflation continues. Now, calendar-wise, really, it's a slew of Fed governors coming out to speak. So starting from early this morning, we've had a few coming out here. Just listen to Adriana Kugler speak from the Fed. And they're all kind of putting out the same narrative, is that it's a little bit soft. We've got to navigate the tariffs, but also that they're not going to do cuts and they're going to hold somewhat, at least into fall, possibly into next year. So we've got this little bit of a personality battle going on between Federal Reserve as well as the government in the United States. So prior to the negotiation with China heading over to Switzerland, this is happening today, some of the administration, and going into the weekend. So a little bit of a warning that this could cause volatility over the weekend. And a lot of times they purposefully schedule these things, if you will, so that if there's extreme moves or extreme volatility, then it gives time to adjust prior to the market open on Monday. So China reporting bumper April exports ahead of crucial trade talks. Now, if you look at the numbers, what it is roughly down approximately 21% to the United States and up roughly the same amount to the EU and up to other areas. So net in all, their exports are up roughly 8%. But what we're seeing is a lot of these goods coming into the EU in particular. And what that's going to do is cause a glut. And when you have a glut, the prices come down. So while this is good for inflation, it could have a very odd effect to deflation. So we've got to keep an eye on that as well. Now, a very interesting twist to this is that Trump is saying he is going to ask China to help with Ukraine conflict resolution. So going to ask China to kind of help us middlemen in this, so to speak, to Russia, of course, to get some resolution here. Now, in the real economy, as I like to say, back in the United States, we've got some telltale signs. We're watching a couple of the corporations having issues. We've got Tesla supplier Panasonic slashing jobs in a large overhaul. Now, not only does this trickle down from auto suppliers and the workers, we're watching service sector weaken tremendously. So as jobs go away, consumers cannot pay their bills. We've got more consumers in the United States, as it says here, expecting to fall behind on their debts. So this was from the New York Fed that did this survey. So a reputable survey, a couple of seemingly random things that actually do tie together. Now, we've got new Pope, Leo the 14th, and he is from America. So the first American Pope, very interesting choice. Not going to really cover that here, though. We've got someone, Raymond, who does coverage of this little frog, and I expect he'll be putting out something very good here in Substack, and I'll put a link in if he does. Now, we've got Sailor. He is from Strategy, now was MicroStrategy, buying, and that kind of pushed Bitcoin up above that 100,000 level. However, his company is not the only ones buying. There have been a couple of others, and that's why it's looking like it's staying a bit stable, at least for the moment, above that 100,000 level. So if it consolidates there, that's a new bottom level for it to kind of sit at. So seeing more things coming into cryptocurrency, we know where this is headed. On top of this, we've got Bitcoin now accepted at a popular fast food chain in the United States. Now it's called Steak and Shake. And I think it's kind of funny because they're saying that they are accepting Satoshis or the smaller denominations of Bitcoin, much like change is to a dollar. And they are accepting Satoshis for payment. So they are now nicknaming themselves Steak Toshi. So we've got Meta looking at stablecoin integration for payouts. This is a little bit of a warning. Stablecoins attracting more institutional investment and becoming United States strategic interest. Now, I've been talking about this. This is actually CBDC coming into play. It is in the works. Now, I'll have a chart in just a moment for the main ones. But with this, we've got Citi unveiling tokenization initiative with SDX in Zurich. So what we're watching is the integration of all of these coming together. So people are still, if they're unaware, for the most part, still talking about CBDC, thinking this is years down the road, and it is taking place right now. So got a couple of words on stocks with Trump saying that you should buy because equities are going to get more expensive. They're going to go up. This is not on growth, though. The problem with this is that it's going to be on inflation. So we're watching pricing go up because as price goes up, that is inflation due to the money supply. So we've got the Feds promising now overhaul of the United States air traffic control system. Now, don't get me wrong, I think the system definitely needs an overhauling, and it absolutely is behind with a lot of the recent issues that have been going on, in particular as one that uses it. So they're talking a cost, though, of approximately $30 billion. So $30 billion that are about to be spent on this. And I'd much rather it be spent in upgrading the infrastructure than in war. But the baseline of my point is that indeed we could watch continuance of not just stock market, but also other goods. This is all contributing to the degrading value of the US dollar. So again, not so much that this is building or producing, but more that the US dollar is getting weaker as has been called for. So as it gets weaker, assets improve in value, including gold, including real estate in particular areas. Now, these are the charts I promised you. So talking about real estate, we've got something in the mortgages here. This is purchasing versus refinance. And as you can see, this is over the past 5 years. But the right here, the blue is purchasing, and we are watching that in decline. And refinance is lower. And this is because refinancing, if you have a lower rate home, because rates are still high at the moment, is not a good value. So we're watching the plummet of refinance, but also purchasing is at the moment down. However, we're watching about a bit of what we would call a grind out and also an increase. So real estate could be making a comeback soon. There's quite a bit that has to wash out first. But with pricing and the real estate crash they're talking about coming ahead, I think it's time to prepare now. And that means to get your powder dry, so to speak, and keep your finances and things in order if this is something that you're looking at, because we're coming into an area where if this comes a bit lower, there are some good deals on the horizon. But what if they tighten up on this money supply, that could really make the difference. So if they allow the loans, and I'll talk more about Freddie and Fannie Mae with the larger behemoth banks at another time, because there's not enough time here, but they are getting federal backstopping with these large banks for these loans. Now, last thing I want to mention is back to these are the stable coins. Which of these will be CBDC will be used? So this green right here, USDT. So this is Tether. So if you're watching the growth of Tether, this is in billions, of course. Over this short period of time, last couple of years is what this is. Magnificent growth here. And then we've got USDC, which is Circle, USD backed by Circle. We've been speaking about those, and this is the one in purple. So these two coming out, they're 1-to-1. So in my opinion, not something to invest in, but just to understand that this is the shift in finance that we're going to be seeing happening across the world. So with this, I wish you all wonderful weekend, good trading day. I will not be in Sunday, so I will see you early Monday prior to the market open. Thank you all again, and until I see you again, stay free.